Compared to the traditional financial system, a very small percentage of crypto transactions are criminal in nature because criminals learned very early on that if you use the blockchain for criminal activity, you are almost guaranteed to get caught given how transparent it is.
As more and more crypto moves on chain, one of the products that's finding real product market fit is stablecoins. Stablecoins are today more than $200 billion and growing very fast. But most of it is still USD pegged. There is a role for local currency, native currency pegged stablecoins, and those are going to become much more important, not just in the DeFi ecosystem, not just in the overall crypto ecosystem, but in the whole financial ecosystem within countries as such. We're going to be speaking to Simon, the founder of the South African stablecoin Zarp, and this is going to be a very interesting conversation. I'm Sri Misra, your host for Alpha National. Simon, welcome to Alpha National.
Thanks, Sri. Good to be here.
Simon, why do we need a local currency pegged stablecoin?
To me, it's a fairly straightforward hypothesis, I guess you'd call it. And that's that fundamentally we think crypto has now proven itself. So we don't think it's going anywhere. Um, Bad news for the naysayers, but crypto's here to stay. We also think that given that this is a force multiplier for doing anything in the financial world better, faster, more efficiently, that everything will be tokenized in time. So real world assets, eventually equities, properties. And we're starting to see the beginnings of this. I think, BlackRock having on-chain index funds, for example, we really are starting to see the beginning of tokenizing traditional financial instruments and putting them on chain. We also don't think that fiat currencies are going anywhere anytime soon. So we're going to still have dollars and rupees and lira and rand for a very long time. And so, if all of those things are true, then every single currency in the world needs to have representation on chain. And we think stablecoins are the best way to achieve that. We don't think that CBDCs are the answer to that question.
Right. Now, if you were to kind of list down the three most important sort of use cases for stable coins, especially from, I mean, we'll get into why stable coins have really found product market fit sort of in the crypto space, but they're all mostly, if you look at the market, it's almost chunk of it is all USD stable coins, then followed by the euro, and it's in some sense making several countries edgy around the dollarization of their economies as well. So clearly there is a need for local currency pegged stables as well. However, in with the USD pegged stables that are existing right now, I think broadly they've kind of served a few important sort of use cases, like for example, just moving out into cash when markets are highly volatile or on ramping. So can you paint what are the sort of important use cases of stable coins currently in the whole digital
Mm.
economy as such?
Look, I mean, if you zoom out and you look at a longer timeline, stablecoins are better at doing anything you can do with money: payments, remittances, treasury management, capital distribution, you name it. Like it's just a better way of doing anything you can do with money. But if you look at the current adoption, I think it's very much the emerging world that's leading stablecoin adoption. I think it's being used as crypto is in general in very rudimentary ways that are mostly speculative in developed markets. But if you look at the rest of the world, I think the adoption is being driven by just the insatiable demand for dollars, which you've already alluded to. Everybody who's not in the USA wants to get their hands on dollars for various reasons. Some of them because their local currency is rapidly being devalued or they're in hyperinflationary environments, but they want dollars. And stablecoins, USD stablecoins, are for many people in the world the easiest way to get hold of dollars. A more practical use case is remittances. So a lot of the flows that we see in stablecoins are in emerging markets, predominantly where people are either migrant workers trying to send money back home, or they small businesses trying to pay suppliers offshore. They've had significant challenges with remittances in the past. One of them being that fees have been completely extortive in the past. They've just been way too high. And again, because everything you can do with money, you can do better with stablecoins. Remittances, I suspect, is probably one of the biggest drivers as a use case at the moment. Um, and then there are various other lenses to look at it through. For example, if you're in an emerging market, you don't want debt that is collateralized in dollars. That doesn't make sense. So if you wanted to participate in DeFi, in some of these liquidity networks, and you want to take out a collateralized loan position, for example, a local stablecoin is a much more sound way to do that than a dollar-backed stablecoin, because you can denominate your debt in your local currency. So, I mean, if I had to highlight a few um, causes for adoption, those would probably be them. We are, of course, seeing payments pick up as another massive use case in some markets. So, besides for remittances, local payments are very big. For example, in Turkey, using stablecoins. But really, we are starting to see stablecoins being adopted for anything you can do with money because they're better, faster, cheaper, permissionless, all of the things that make crypto so appealing, but without the price volatility.
Right. Okay. And what's been the sort of your journey and experience in creating the Rand stablecoin? Give us
Mm.
a whole perspective of that, and feel free to go deep into it and sort of thinking behind it, how you went about structuring it, what's been the adoption journey so far, and let's talk about that.
Mm. To start at the end, I think the adoption journey is only getting started now. I think that's true
Mhm.
for all non-USD stablecoins. We're very early in the adoption cycle, and so it's very difficult to preempt exactly how that'll play out. So we're starting, we see growth month on month in adoption and usage, but it's still very, very early days. So while I have a high level of conviction for local currency stablecoin adoption, it's yet to prove itself. So we're not quite there yet, but the adoption is starting to tick up. Especially in arbitrage trading, which, as you know, is largely automated in DeFi. But wherever algorithms spot an arbitrage opportunity, they will take advantage of it, and that includes with local stablecoins. But our experience has been fantastic. We've had really good engagements with regulators. We've got a good industry in our home country of South Africa, where there's a lot of interest in using our stablecoin in different projects. Some use cases springing up that we had never imagined that are quite interesting. I think if you look at it from a challenge perspective, managing liquidity is a big challenge for any crypto
Mm.
project, but stablecoins included. It's difficult to attract market makers because they're used to dealing with highly volatile crypto assets, where there's clear opportunities, and they're still getting their head around local stablecoins and where the opportunities exist in that market for them. Um, so we've got a lot of significant challenges, but we're in a good position. I think one of the biggest advantages we have is that our treasury is managed by Old Mutual Wealth, which is one of the biggest asset managers on the continent. We have a similar arrangement with them to what Circle has with BlackRock for managing the treasury of USD coin.
Mhm.
So our treasury is managed by a legitimate asset manager who's been doing this for centuries, depending on which part of their business you look at. But they're one of the oldest and biggest in the game, and I think that gives people a high degree of trust as well in the project, that there are serious TradFi institutions that are involved in our treasury management, looking after the fiat that backs the price of our currency. So I think we've been handed a really good hand of cards for the beginning of a project like this. Um, and it's up to us now to turn this into a success. And a lot of that is predicated, on my prediction of where local stablecoins are headed and why we need them, which I have already elucidated on.
Okay. And currently it's called the Zarp, right? ZARP.
Yeah, ZARP or ZARP, depending which part of the world you're in. But we just call it
Right.
ZARP. Yeah.
So, and
And that comes from the ticker for the South African Rand, which is ZAR.
Hmm. Right. And how does a user get hold of the Zarp currently? Is it are the pools on sort of dexes as well, or is it only from exchanges in South Africa?
No, we've got a few centralized exchanges that have listed Zarp, so you could use them as a fiat on ramp into Zarp, or to get out of Zarp back into fiat currency, or you could trade other crypto assets for Zarp on their platform. We have pools on Uniswap, on Ethereum, Base, Polygon, where the tokens are freely available, and then on the Solana ecosystem as well. We've got some liquidity pools which will aggregate through Jupiter, which I think is where most trading happens on Solana. So tokens are available either in CeFi or DeFi. Um,
Hmm.
we don't allow retail issuing of tokens directly from the Zarp company. That we only do that through institutional partners. So you'd have to go to an exchange or another entity that was one of our institutional partners if you wanted to issue Zarp directly as a retail customer.
Right. And obviously it's completely one is to one backed.
Yes, we're actually over collateralized at the moment.
Mhm.
So we're over 100% collateralized. Our aim is for that to always be true, but we are fully backed by cash equivalents, so Rand in the bank essentially, that's managed by Old Mutual Wealth.
Right. So the rands also seen significant devaluation pressure over time, and
Mm.
I remember living in South Africa back almost I think that was back in 2005 to 8, so almost 20 years back. And
Mm.
obviously, the rand has changed a lot in its value from then.
Yeah.
And we've seen in some of these sort of the more emerging markets where there's a especially crypto users preference for USD backed stables. How are you positioning and sort of getting the adoption of the Zarp when it competes with USD backed stables? And is there a regulatory framework there which also helps the Zarp in some form?
So we don't have direct stablecoin regulation in South Africa yet, but we do have a very good regulatory framework for crypto in general. So the local conduct authority, the FSCA in South Africa, has a licensing regime for crypto companies to come in and get licensed, and we're in that process with them currently. I suspect there will be some more specific stablecoin regulation in time, but that hasn't emerged yet. However, from a regulatory perspective, South Africa is a good place to be. It's crypto friendly. There's a high degree of understanding from the regulators as to what we're trying to do and how it should work. So the regulatory part of it is I would say positive in South Africa. In terms of adoption, I think it goes through to what I was saying earlier. You know, the world is starting to wake up to what stablecoins enable.
Mm.
Um, the South African rand is a particularly interesting currency. It's frequently the most traded emerging market currency. It's a darling of forex traders around the world. There are some idiosyncrasies in the South African economy that make that true, I think. So, while you alluded to depreciation in the local currency, it also tends to be pretty stable when you compare it to some other emerging market currencies. South Africa has very sound monetary policy, for which we've been awarded several awards at Davos. Um, and then you have, other unusual pieces of policy, for example, like foreign exchange control. You put that all together, and the rand is frequently, in the top 20, sometimes even the top 10 most traded currencies in the world, and usually the most traded emerging market currency.
Hmm. Okay. Now, how did you arrive at the Zarp? And I know you've got a very interesting, illustrious crypto life. Having written two books as well, one of which I read and absolutely liked. about beyond Bitcoin and DeFi. I just love that book, and various analogies that you and your co-author went into in terms of how DeFi will really disrupt and sort of existing financial systems. And so that was very
Mm.
interesting. But Simon, tell how what's been your sort of crypto journey? Where did you start, and how has it sort of led you to the Zarp? And love to hear that.
Great. So originally, I come from a media background. I used to work in radio and did some writing for magazines and newspapers, etc. And in 2010, a friend of mine told me about the Bitcoin white paper. I hadn't heard of it before. So I went home and did some Googling and read about it and found it extremely interesting. Although I must admit, I didn't fully understand it in the beginning. I don't think anybody did the first time they encountered it.
Mhm.
Um, but not long after that, the editor of a magazine where I was doing most of my work asked me to write a story about Bitcoin, which forced me to do a deep dive and get more practical experience with the currency. That became a cover story on that magazine, which at the time was the top financial weekly in South Africa.
Mhm.
But because
And this was
Bitcoin was so
2010.
new, so the story came out in 2011. Yeah, early 2011, and a lot of Bitcoin user forums and online groups started posting the story because it was the first time one of a mainstream media outlet had covered Bitcoin in depth, um, and so that really was the beginning of my journey. My entire career pivoted into product development after that in the fintech space. So I worked for a number of startups. One of them was a company called Luno, or it's called Luno now. It used to be called Bitix, which has gone on to become quite a successful exchange. I worked with a team in the UK called Curve on a project called Curve. Well, the website is curve.com. But anyway, got a lot of experience building product. Wrote two books, as you mentioned. The first one called In Math We Trust, and the second one called Beyond Bitcoin, which I wrote with my co-author Stephen Sidley. Um, and after that, really decided to take what I'd learned and start my own business. Really chasing down some of the more intellectually stimulating opportunities that we thought were in front of us. Um, and one of the things that presented itself was the lack of a stable coin for the South African rand. We were imagining some DeFi activities and wondering about the availability of rand stablecoins. Did a research project, didn't find anything that we could use. And so we decided to, take what we knew and really address this opportunity and create a South African rand stablecoin. And so that was the genesis of the Zarp project.
Mm-hmm. All right. And you founded Inves Capital, and how's that going? And what does Invest do?
Yeah, so we've got a number of divisions, but the two that are our focus are we've got an asset management platform called Venox, which makes crypto investments available to high net worth individuals and family offices. So we're very proud of that platform, and we have some interesting relationships that we're working on at the moment on the distribution side, and then Zarp as the stable coin, which is my main focus at the moment. So we're really just focusing our efforts on those two divisions. We've got some holdco and other investments that we've made, etc., that are more passive.
Okay. And Simon, you obviously sort of almost an OG, not almost, sort of somebody who got into crypto back in 2010, 11, right after Bitcoin was out, just a few years out back then. So I mean, you've really been immersed in this space and seen everything that this whole space has gone through, including yesterday's major $1.5 billion liquidation, and Bitcoin. I don't know what it's sort of almost went to 86,000. I think. Uh, what's happening? What's how would you relate today's market construct, and how you've seen the market over the years, and can you connect that to the role of stable coins, and why their adoption is really becoming more and more widespread in these cycles and this volatility that the space has seen over the years.
Mm. Well, to start at the end again, I think part of the reason that stablecoins are so massively adopted during cycles like this is because more and more trading is moving on chain. So in the early days of crypto, most trading was happening in centralized exchanges, Bitfinex and Mt. Gox before it crashed. Um, but increasingly, a lot of that trading is moving on chain, and we see that if you look at the volumes on Uniswap, for example, that's where most crypto moves now. And so I think, sorry, I think that traders who want to cash out of crypto. You mentioned that the price of Bitcoin is down today. There might have been some people taking profit just before then. Increasingly, they want to take that profit on chain and they want to store it on chain. And so stable coins are the obvious way to do that. So I think that's to the latter half of your question. But if I reflect back over my experience in crypto, it was interesting when I first got involved because I didn't kind of, well, I wasn't thinking of Bitcoin as an investment when I first found out about it and started learning about it in 2011. To me, it was the currency side of the equation that was more interesting because that
Mm.
speaks more to financial inclusion, to actual real world use cases for the asset. The whole digital gold narrative, to a large degree, didn't exist back then, at least not for me. It was sort of, the deflationary nature of Bitcoin was part of what Satoshi needed to enforce to make Bitcoin viable as peer-to-peer digital cash, which was the title of the Bitcoin white paper. It wasn't called peer-to-peer digital gold. It was peer-to-peer digital cash. It was designed to be used as a monetary instrument, as money, as currency. Um, Unfortunately or fortunately, depending on your perspective, Bitcoin has ended up being something very different. I don't think anybody thinks of it as peer to peer digital cash. They very much buy the digital gold narrative. It's highly speculative. It's prized only for its scarcity, really. And if you preclude activities on layer twos like the Lightning Network or ordinals or some of the other things being built on Bitcoin, predominantly it's just an investment instrument. But to go back to then, that's not how I was thinking about it. However, very shortly after I found out about Bitcoin, we had the Mt. Gox hack, and the biggest exchange for Bitcoin at the moment lost a significant amount of liquidity, and the price of Bitcoin crashed. I think, and maybe you'll remember more correctly, Shri, when the Mt. Gox crash happened, I think Bitcoin was trading at about $22,
Hmm.
and it crashed down to, for all intent and purposes, zero. And everybody was sort of laughing at the people who had adopted this. The consensus was it's all over for Bitcoin. This thing's going to go away now. Nobody wants it. It's over. And of course, that wasn't true. And so that was kind of my first experience of a crash in the Bitcoin market or in
Hmm.
crypto. And since then, we've cyclically seen these things happen. It's also curious looking at them through the lens of the Bitcoin, halving cycle and how the algorithm adjusts the rewards paid out to miners every 4 years, and how we see some consistency around what that means when the supply side for Bitcoin is adjusted, and how resilient this asset class is, because that tells me it really is providing value, and we can argue about that value and there's subjective opinions about it. But for better or worse, every time there's a major crash and everybody thinks that this is over now and crypto's going away, it always just comes back stronger than ever. So, since the Mt. Gox hack, we saw the FTX saga, as you alluded to, the Bybit hack this week, where $1.5 billion, give or take, of ETH was taken, probably by the Lazarus Group. Um, and I think after watching this movie play out over the last, call it, 14 years, um, if anything, my mindset is quite resilient to these crashes, because this is the 100th time I've been told that crypto was a stupid idea and it's all over now, and the market is turning against it and it'll never recover. And so, if I had to sum up my current mindset, I think I'm more bullish than ever.
Hmm.
I don't think any of these crashes are existential, and I think crypto will do what it's always done since that first Bitcoin transaction in 2009, which is weather the storm and come back stronger. Because this is an idea that's time has come. Um, you know, Bitcoin and crypto in general solves a lot of real problems in the world, and more people are waking up to that every day. Plus, we're now got a regulatory environment in the USA. You don't have to love the current administration, and it's a very mixed bag of strange policies. But for better or for worse, this is a very crypto-friendly environment now in the USA. And if you look at how successful crypto was, despite the headwinds that it faced from regulators in the states trying to shut it down, politicians very actively trying to drive policy against it. Um, you know, the money badger of money got through that, and now it's got green lights to really grow as an industry, to mature, to be regulated, and to unlock all of that value that those of us who have been behind the scenes for the last 10 years believe is there.
Yeah, that's a sort of fascinating and fast, broad brush picture of the last 14-15 years of crypto's existence, and it's very fascinating how some of this has panned out in very similar ways, almost these cycles. And you mentioned, I think I'll pick up two things. One is, earlier you mentioned about how a lot of the transactions were sort of obviously happening off chain on in centralized exchanges in what has come to be known as CFI. But since DeFi has taken center stage, and dexes like Uniswap have really um moved volume on chain, and there is a whole preference for really holding assets directly, and that's where sort of the use case of stables have also come about. So that's one part of the how transaction moving on chain has changed things. The other is really how the evolution of different parts of the crypto token ecosystem have evolved. Bitcoin clearly, like this digital gold store of value, no longer, yeah, really nobody looks at sort of undertaking transactions as money with Bitcoin anymore. I think that role is increasingly moving to stables, and we'll see how that pans out. Then we've got um, utility tokens, the rest of essentially whatever is being created in DeFi and deep crypto projects, which have their own native tokens, protocols, and also chains having their own coins. That's the utility tokens is where the space which will see a lot of action as we move ahead. Of course, we all know that even today 70-80% of the entire token universe, even forgetting memes and all of that stuff, everything, even if you leave that out, 70-80% of the current token ecosystem will just disappear over time. They A lot of it is just speculative scammy stuff which will go, but the 20% that is building real value will become substantial. That's the third part as I see it. The fourth part in the whole token ecosystem is tokenized assets. Essentially, whatever will move into structured products or tokenized assets, which might have underlying crypto assets, or might also have underlying real world assets or financial assets which get tokenized. So, in if we look at these four broad areas of how the token ecosystem is evolving, what are your thoughts? How do you see, if you were to kind of crystal gaze 10 years out, how do you see this current 3.5 trillion market going where, and what would be the sort of role of each of these four segments? And please feel free to add on if you feel there are more segments that need to be in there, and how they will evolve.
Yeah, I think it goes back to what I was saying earlier about us really re-railing the financial system. So to me, there isn't one specific use case of crypto that makes it appealing. It really does everything that money can do better. It's faster, it's more efficient, and most importantly, it's programmable. So
Yeah.
if you were trying to, for example, automate parts of your capital allocation strategy. That was very difficult in the old world. You were using APIs and relying on banking systems that were antiquated and not available. And now you have inherently programmable money. So, whether it's your payroll at the end of the month or your capital allocation strategy or rebalancing between currencies because you're a multinational company or settling between merchants and card networks, for example, really anything you can do with money can now be automated to a greater degree, can be done with less fees, more efficiently, more availably, um, and in a more inclusive way. So I think the other exciting opportunity to think about is more of the world that was in the dark from an online economy perspective can now start to participate in online economies because the blockchain doesn't discriminate based on your balance or how much money you're trying to send. It's able to onboard you as a user, even if you're just sending a few cents to somebody, depending on which network you're utilizing. So I really think that as the world grows into an understanding of why this is better, you'll really start to see it transforming every part of the financial system. How we think about banks, how large financial institutions need to be. I mean, they're already bloated. They're already orders of magnitude larger than they need to be to function. But when you've got a force multiplier like crypto technology, impacting these industries, you really can imagine taking a massive organization and reducing it down to a set of algorithms that might not even need anybody
Mm.
involved in its running. And so I think that's obviously disruptive. And anything disruptive takes time to adopt because we need to think about the human beings that are displaced as a result of it. So whether it's crypto or AI, we need to think about how we proceed. And there will obviously be some resistance as those running these big institutions fall on um, on their incentive to maintain the status quo. So it's going to be messy and it's going to take a long time, but eventually it displaces everything we do in the financial world. That's my belief anyway. Unless we really do go about this in a very strange way and decide to stick to the ox cart, even though we've invented internal combustion engines, which seems unlikely to me. That's just the story of innovation. And so I don't know that I'm directly answering your question, but that's sort of how I see it playing out. Obviously, regulation will be the hurdle at every big significant turn. But we're already starting to see it happen. Visa and Mastercard, for example, which
Mm.
arguably have the most to lose from crypto payments taking off, have embraced the technology for settlements and are starting to understand, how crypto potentially becomes part of their activities. Whether or not it displaces them in time entirely is a different discussion, but there's an appreciation that this technology isn't going to go away. So when a technology presents itself in that way, you can either dig in your heels and try to combat it, and good luck with that, or you can embrace it and cannibalize your own activities and see how you can use this technology as a force multiplier for your own business. And I won't bore you with the stories of Microsoft and Linux or Apple and how it cannibalizes its own products before other people can. But I think that's really the dividing line for the financial institutions now, or the TradFi institutions, is there will be the firms that appreciate that this isn't going away, um, and that it is a force multiplier for their activities. They'll embrace it and they'll use it to grow. Other companies will try to fight it, and we probably won't be talking about them in 10 or 20 years because they won't exist anymore.
Mhm. Yeah, no, I'm with you on that completely. I mean, having sort of been immersed in this space for substantially sort of lesser time than you, but since the last 4 years, and the power I see of really redesigning the whole asset management space is immense, and that's what we've been doing at Arna, building an advanced DeFi asset management platform, which I clearly see how we can bring both the power of predictive AI and tokenization to build a complete asset management infrastructure for and which can literally replace how multiple intermediaries today exist in the financial system for creating any financial product and taking it to market. So everything can be managed, and it's through a tokenization platform and structured products, and that's really um, the really the future of um, what is possible with crypto. And when we look at there's multiple use cases and multiple vectors of it. At the same time, we continue to face serious threats when the more we move on chain. Security threats, code vulnerability. So how especially in a scenario when we from here 3 trillion, let's kind of imagine a scenario where it's 10 times of this size, and let's say take stable coins, which will be a chunk of this as such. What are your thoughts on say freeze authority for stable coins?
Okay, so maybe just for anybody listening who doesn't know what freeze authority is, this is a function of a smart contract where the issuer of a token can actually freeze the tokens in a particular wallet and essentially make them unusable. So in a way, you're removing them from the network. Why would you do that? Well, as with the traditional financial world, we have a set of regulators and policies around terrorist financing and money laundering and illicit activities. And stablecoin issuers are expected to be able to take enforcement actions against illicit activity on chain. So this varies from chain to chain, but in Ethereum, for example, it's possible to build in variables that give you freeze authority on a token. And what that means is if I get an enforcement action from an authority going, this wallet was part of a hack, it's a terrorist organization, we'd like you to please isolate those assets, we can then send an instruction to the network to freeze the assets in that wallet and make them unusable. Um, on some networks, there's also possible to seize tokens.
Hmm.
So there, on some extensions on some networks, that'll give you the ability to actually remove the tokens from one wallet and pull them back. Now, that is an interesting conundrum for crypto because I think a lot of people in crypto have libertarian values around decentralization and freedom and privacy, etc. And using tokens that can be frozen or seized kind of goes against that ethos. But then, to be honest, stablecoins go against that ethos as well. Well, reserve-backed stablecoins because they are fundamentally centralized. We make no bones about the fact that Zarp is, to some degree centralized. It relies on a treasury that we manage. We have an audit process and we're very transparent about our reserves. We've outsourced our treasury management partially because of that. But fundamentally, there is a centralized entity that could do its job badly and compromise the price of the token, etc. Or in this case, could freeze the token in your wallet if you have been involved in illicit activity. Um, it also makes it challenging from a liquidity provisioning perspective, for example, because on some networks like Solana, having the freeze authority enabled is frowned upon for projects like meme coins because it's used as part of a strategy for rugging people. So, for example, you'll set up a meme coin, you'll steal somebody else's idea, you'll enable freeze authority, and then when somebody buys the token, you'll immediately freeze it so they can't sell it again. Pump up the price of the token. You're the only person who can sell. And there are various scams you can run using freeze authority. So it's interesting. The thing that is frowned upon, for meme coins and utility tokens and other crypto tokens by the industry are things that you have to do as a stablecoin issuer because you won't get a license without it. You'll make your life very difficult from a regulatory perspective. So whether it's Tether, USDT, USD Coin, or any of the other leading stablecoin projects, they all use freeze authority. They have to.
Okay.
And in fact, I've heard that Tether claims to take more enforcement actions than any other crypto project, which makes sense because it is the most used token in the world. Um, so that's sort of my take on freeze authority. It's a necessity. We
Mhm.
can have divergent views on the principles behind it, but if you want to run a reserve-backed stablecoin, you won't get very far without it.
Yeah, no, I agree with that. I think quite often there is a sort of conflict between a purist state and a pragmatic state. and which will be there. And yes, this any sort of authority which kind of in some sense takes away the decentralization or the permissionless nature of crypto is it doesn't go with the purest view. But the more and I kind of I'm bringing up that point of why security is absolutely vital for every other for crypto to really thrive and be able to be really adapt and adopt, disrupt the financial system overall and be able to and not disrupt it for the sake of it, but because there's a clear need from a user perspective and for multiple use cases which it clearly serves. But the security is clearly a large impediment at this stage. In fact, I tweeted a few days back after earlier about this when this Bybit hack happened, that freeze authority is something that is not only should be relevant for stable coins, but probably for a lot of the utility tokens as well, because unless there is a clear way of making stolen assets redundant, it's just becoming a major cancer for the industry.
Yeah, to a large degree. I mean, it's interesting if you look at the Lazarus hack from Bybit that we were talking about earlier with this $1.4 billion that was stolen. Ethereum doesn't have freeze authority, but given
Yeah.
how transparent things happen on a distributed network like Ethereum, it's very difficult to cover your tracks when you've hacked, especially significant amount of money. You
Mm,
know, um, even if you're using mixers or systems like Tornado Cash that are designed to privatize, token transfers and essentially make them private, none of that is bulletproof. If somebody wants to trace your steps through these networks enough, they'll be able to throw enough resources at it, and because these are transparent networks, they'll find you. And I think that's part of the reason why there is so little illicit activity on blockchain networks, and we know this. The forensics have been done. It's compared to the traditional financial system, a very small percentage of crypto transactions are criminal in nature, because
mm,
criminals learned very early on that if you use the blockchain for criminal activity, you are almost guaranteed to get caught, given how transparent it is.
mm,
It's kind of in a Goldilocks zone of privacy, being pseudonymous. And so, yeah, it's interesting to think about that from a self-policing perspective. Do we really need heavy-handed approaches to
mhm,
kind of compromising the functioning of the network when just the inherent transparency of it weeds out a lot of bad actors to begin with? I mean, the
mm,
Lazarus Group is idiosyncratic, given that it's a North Korean organization in a pariah state that does not have treaties with any other country in the world just about for deportation, etc. And so, if you're a hacker group in North Korea, you function with a different set of incentives to somebody anywhere else in the world. Um, but it's highly unlikely that you would find actors outside of pariah states willing to take the risk of a $1.4 billion hack, unless they had their head buried for the last 10 years, because every other hacker that has tried to do anything remotely like that has been caught and brought to book.
yeah. Yeah, how does and maybe it's for us a different conversation. I mean, the Lazarus Group is sitting with so many crypto assets now. Unless they're able to launder it and kind of off ramp, which I understand they are actually able to in some form or the other. I mean, that presents a real threat. Then it's no longer traceability is no longer deterrent enough.
Yes. Well, look, I mean, they are very limited in who they can transact with, and I'm not an expert on that, but I would imagine that a state like Russia might be open to doing business with North Korea in some ways. So they may be exchanging crypto with each other. Um, but again, that's it's a very limited channel of venues that they can use to operate in with all of these
Yeah.
assets.
Yeah. Yeah, I read somewhere comment that they over a period of time they slowly sort of offer to the renminbi as well in China, but I don't know how that they're able to do that. Well, that's a separate conversation, and I'm sure experts are looking into it. Going back to stable coins, and yes, there is a sort of clear necessity for a freeze authority, and not just from a regulatory perspective, but there are other dimensions to it. Now, they're obviously fully sort of reserve backed stables, currency backed, pegged stables, and there are the synthetic stables as well, right?
Mm.
The most recent successful big one being USD by Athena, for example. What are your thoughts on um, synthetic stable coins or algorithmic stable coins, and how do you see things panning out on that front?
Look, I think it's interesting to see the progress of algorithmic stablecoins and what is and isn't possible with them. I'd argue that we're yet to see a fully algorithmic stablecoin that has proven itself.
Mm,
Um, and I think there's some fundamentals that aren't just exclusive to crypto that make it a challenging thing to do. Currency baskets, for example, have been tried economically throughout history. They never work. It turns out that if you're going to represent the value of something, at some point in the equation, you're going to have that actual thing in reserve. So if you look at the most famous algorithmic stablecoin probably in history is DAI. The
yeah.
DAI treasury eventually ended up being almost entirely consisting of USDT and USDC, which are reserve-backed stablecoins. So,
Mm,
DAI became less and less algorithmic and became reserve-backed itself. And then you have to ask the question: if its treasury consists entirely of Tether, then what is the point of DAI to begin with? And of course, its utility in the MakerDAO system is the answer to that question. But increasingly people want stable coins that actually represent the value of something real that is in reserve. For example, I could create an algorithmic stablecoin that mimicked the price of gold, perhaps. Um, and that's intellectually interesting. But the moment you have another token that's backed by actual gold in a vault, it's it fundamentally becomes the asset I would rather hold because I know there's actual gold in an actual vault somewhere that's able to back the price of this token, and which makes it unlikely that this token would lose its hedge. So I think that reserve-backed tokens or stable
mhm,
coins are really the only game in town. I think algorithmic stable coins are interesting. The Athena experiment is interesting. Some thinkers in our industry, like Andre Cronje, for example, have come up with reasons why the reliance on futures trading and that sort of option based approach means that Athena probably will be limited in its scale. And I don't want to speak for Andre. You can go and read his piece on Medium about why that is. Um, but fundamentally, we just haven't seen an approach to algorithmic stablecoins that has proven itself, sort of battle tested and stood the test of time yet. That's not to say I'm against the approach and that it's not possible. I just think that fundamentally, a reserve-backed token that represents the value of actual cash equivalents, or in the case of Tether, increasingly treasury bonds, which is probably the safest cash equivalent in the world.
mm.
That really is. If you look, if your job is to be stable, that's as stable as it gets.
Mhm. Yes. So yeah, quite clearly, I mean, edge case scenarios in markets, and especially the derivatives markets have not been tested, and Athena has not been exposed to that. So one has to see. You just touched upon basket currency approaches, and the most famous one, which was killed, was Libra, of course, or DM. And w- if you had the opportunity today to kind of recreate DM, what do you think? Would that be a more sounder approach, especially for a non USD pegged stable? And as I speak about it, some, BRICS comes to my mind, which of course is Brazil, Russia, India, China, and South Africa. And but is there a, if you had, if you were at the drawing board, how would you look at it differently?
Well, I wouldn't look at it at all. It's just not something that interests me. So, it is interesting to imagine some. Well, it is interesting to imagine something like a BRICS coin
Hmm.
that BRICS countries could use to trade with each other. Um, but fundamentally, I'm not sure that that's even possible. I think essentially you'd fall back on whichever was the most dominant currency in BRICS, and
Hmm.
probably that would be the one that everybody wanted to trade with, which is moot because at the moment even the BRICS countries, run predominantly on dollars for their international trade, etc. So it just doesn't strike me as something that the world wants or needs. And it's also an incredibly difficult thing to achieve, as we've alluded to already. Um, but
Yeah.
it
So
is an interesting thought experiment. Yeah.
yeah. So I was I'll just interject. So I was just giving the sort of analogy of bricks, but overall a basket pegged stable, the likes of DM. If you were at the drawing board, do you think there is a use case for that, and how would you approach that? And if I remember, DM, sorry, was just for the listeners. Uh, uh, it was, I forget the proportions, but the USD, Euro, the Japanese yen, and I think Singapore dollar. Those were the four constituents that
Yeah,
Libra had. Yeah.
I don't recall exactly, but that sounds right. Yeah.
Mhm.
Yeah, I
So,
don't recall.
what as someone who's really understands stable coins. Do you think there is a space for a basket based approach?
No, I mean, again, you would need BRICS countries to agree that they were going to use a new currency
Sorry, I'm not talking
for
about BRICS,
trade.
Simon. Just generally for a more
I'm
global
using BRICS
state.
as an example of why this doesn't work ever, right?
Okay.
It's because right now global trade relies on the dollar, and that's
Mm,
why people want a dollar stablecoin. I could create a basket currency that has its own value predicated on, for example, the BRICS group, but unless the BRICS countries adopted that for their trade, nobody would want it. And the only
mm,
reason they would adopt it for their trade is because the BRICS countries had collaborated as central governments to create their own currency basket, right? And to create their own BRICS currency. Now, if there was a BRICS currency, I, as a stablecoin issuer who wanted to issue a BRICS currency stablecoin, would have a treasury reserve of whatever that currency was. I wouldn't be running the basket of underlying assets myself because that would be inefficient.
mm,
So, you need that human adoption level. If I went and invented a token tomorrow that somehow proportionately represented the value of the biggest economies in BRICS, who would I be selling this to and why would they want it? If I went to traders in India and China and said, I've made a BRICS currency, they'll go, okay, great, but we use dollars, so that doesn't help
mm,
us. You'd need it. You'd kind of you'd be putting the cart ahead of the horse. You'd need the BRICS countries to first decide that they're creating their own currency basket and issue their own currency for global trade, and then you could follow that with issuing the token. So I can't even think of a currency basket situation that would be useful, unless it was pegged to an existing instrument in the real world that represented that value. I don't know if that makes sense.
mhm. Yeah, no, definitely. I mean, it's essentially replicating an on-chain, much more efficient way of using an underlying currency which is already adopted in this case, cross-border trade. So unless there is a real use case, yeah, to create a use case for something like that, yeah, it does seem counter intuitive. But yeah, I mean, this whole world of stablecoins is so interesting, exciting. One will sort of have to wait and watch how it pans out overall.
Yeah, but I mean, to think about it, your treasury management would also be very interesting if you're trying to manage
Mm,
treasuries of six different currencies, fiat currencies. I'm not sure where to even begin imagining that, but I guess practically it would be possible. I just don't think that the use cases would be there.
mm. That's right. That's right. Um, do you know? Just If you look at Africa overall, a continent where there are multiple countries will have tremendous, uh, adoption of crypto for multiple use cases, be it payments, be it cross-border remittances, be it just as a hedge against highly unstable currencies. Do you think um, there is a application of stables beyond USD stables in the wider continent of more local currency based ones, or more sort of established economies like South African, for example, and a rand based stablecoin. Is there any thought around that?
Yes, I believe that, as I said earlier, every currency is going to have a stablecoin representation if the economy is participating globally on these new financial rails to any degree. So, you might be a small country in Africa, but you still have trade happening. You still have local agricultural operations. You still have merchants taking payments at stores. And all of those activities can be done better with stablecoins. So I don't think it matters what the size of your economy is. Um, I think it matters that you have a local currency that's relevant. And if you have a local currency that's relevant, then you have a use case for stablecoins, or at least I believe you do. And now it's up to the world to validate or invalidate that hypothesis. But that seems obvious to me.
Right, but then it kind of takes us back to that question of there are two African countries or two Asian countries with trading with each other, but still using the dollar, right?
Yeah, that would probably be how it would happen right now. So they would pay each other using dollars, I assume. So the local stable coin, for example, you might have distribution in a small African country. You're accepting the local stable coin for payments. You need to pay a supply in another country. They want dollars. You would then swap your local stable coin for dollars and remit it to them. Um, but I think increasingly, given that
Mm,
stable coins, for example, in the old world of finance, if I wanted to pay you with my local currency, I'm in South Africa, you're in India, foreign exchange control aside, you can't receive African Rand into your bank account. Your
mm,
bank probably doesn't support more than one currency. And if it does, it will probably be the dollar, whatever. So you need to receive rupees, for example, or dollars. But obviously, that changes in the cryptocurrency world. So, the fact that I'm in South Africa and somebody else is in China, for example, doesn't preclude them from accepting my local currency. It makes this new avenue or opportunity available that didn't exist in global trade before, where if I was bullish on your local currency, I might, as a supplier in an offshore venue, choose to hold your local currency instead of dollars, for example. So I don't know who would be in the market for this, but when you've got something that becomes possible that wasn't before, it's
mm.
likely that you're going to see at least some small fraction of people adopting it. So perhaps you will see companies have more of a kind of a global approach to their treasury management and agree with an offshore client that they are willing to accept their local currency.
Right. No, fascinating. I mean, and I was just looking at the numbers for stable coins. Obviously, after USD, it's the Euro coin. And very interestingly, so I'm based in Singapore, and the Singapore pegged dollar is actually number three in the list. So there is a huge use case for that. And there's a Japanese yen one, which is still, I think, around half a billion. But clearly, sort of everything, the writing on the wall seems to be very much there for native fiat currency based stable coins, and their adoption happening sooner than later. And one of the things I do on the Unhash podcast is celebrate a moment in the entrepreneur's life. And Simon, I at least I'd like to sell toast to the Zarp and much wider adoption for it.
Thank you very much, Sri. I'll drink to that too. Cheers.
All right. Uh, Lovely having you, Simon, on Alpha Nash. Thanks.
Thank you very much, Sri. It's always fun chatting.